Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's July 14th. Hey, we got just a couple items here today. As we mentioned, we had the weekly jobless claims. So last week we had 254,000 people apply for unemployment. The forecast for this week was 265,000. And we basically had the same reporting as last week, another 254,000 people apply for unemployment. So decent numbers, good numbers to look at here. We also got the producer price index, which is the wholesale on the it's the inflation numbers on the wholesale side of things. Now, we look at these, but they're not extremely important, primarily because a lot of times if costs go up on the wholesale side, it doesn't always get passed on to the consumer, and that's what we really look at. So, without further ado, back in May, we had a 0.4% increase in the producer price index. This is also called the PPI. Forecast is at 0.2%, and it exceeded that. Now, if you take out the food and energy, which creates volatility in this gauge, we have what they call the core PPI, and and this is what really the Fed looks at, core, whether it's CPI or PCE as the two main consumer gauges, or even this one. They kind of look at the core. But when you see on the news the headline numbers, you always see kind of like the producer price index at the main one, with the food and energy prices in there. But anyways, let's get back into it. We got May at 0.3% increase for the core PPI, and the forecast at 0.1% is supposed to go down, and it went up again, 0.3%. So inflation shows it going up versus when we thought it was going to go down. It went up a little bit here. Stock market's up. A lot of it has to do with, again, if you're not aware, there's earnings reports starting to be released again. As we had earlier this week, we had Alcoa come out, but today we had Chase come out better than expected, so all the financials are going up as a result of it. We had a few Fed speakers speaking a bit today, and then we also have Bank of England kind of shocked the markets by leaving their rates unchanged. They decided they're at 0.5% and decide not to cut rates. They think that perhaps they will go leave as status quo, wait till the new government comes in with the new prime minister, and then see what their agenda is before they make any change. So I think it'll probably be until August when they might make the next, if they might make a change. But we'll have to kind of wait and see here. So let's take a look at our bond market, see where we're at, and we're down about 16 basis points from where we left off yesterday. So that translates to worse pricing today. So rates went up a little bit, and now we're below this next level here, and this can be a concern because now, as you can see, we have a couple of days here of downward trends. So now we're starting to form a downward trend right here. So this is something to kind of keep an eye on, because this is something that rates could get worse here real quick. Now, long term, I do think we will probably be back up here again, but in the short term, we could see rates rising a little bit before they go upwards. All right, so let's keep our fingers crossed and hope that we can get some better rates sooner than later. All right, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.